Bitcoin. First, they ignore you.
What do you fear?
Then they laugh at you.
Yes, everyone's drinking the Kool-Aid. I think.
Then they fight you.
I have to say this, and I'll say it just once.
Then you win.
Governments cannot stop this innovation, and those that have tried have already failed.
All you creeps that are controlling money all throughout the world, your time is slowly closing in. Am I right?
Yep.
If this is your first time here, make sure you subscribe and click on the bell so you don't miss any new videos. Ever since its inception, Bitcoin has been called many things.
Bitcoin, for those of you who don't know, is an electronic online currency that was created in 2009.
Bitcoin is better than currency in that you don't have to be physically in the same place. And of course, for large transactions, currency can get pretty inconvenient.
Bitcoin is fundamentally different because in Bitcoin, you don't owe anyone anything and no one owes you anything. It is not a system based on debt. It is a system based on ownership. And no one can censor it, no one can seize it, no one can freeze it.
In the press, it has been pronounced dead more than 300 times, and yet today it stands stronger than ever. When Bitcoin first launched in 2009 as a response to the financial crisis, it was considered a pipe dream for it to reach $1 per Bitcoin. Surprisingly, it only took 2 years for Bitcoin to reach parity with the US dollar. This happened 7 years ago, on February 9th, 2011. This was also the era of the now infamous 10,000 BTC pizza.
A Bitcoin was worth less than a penny when Laszlo Hunyadi first traded Bitcoin for pizza 9 years ago.
$800 million.
Yeah.
So, okay, so let me just get this straight. You spent about $800 million on pizzas.
Well, if you look at today's exchange rate.
Are there nights you wake up like in a cold sweat where you think, I could have had $800 million if I had bought those pizzas?
I think thinking like that is not really good for me.
Looking back, some of the comments from this period seem quite amusing today.
In the early days, you know, I'd get phone calls from my buddies. Oh, hey man, I lost 10,000 Bitcoins because my computer blew up, right? Back then, one Bitcoin was less than a penny, right? So nobody cared. They lost $10. I don't care, right? And now 10,000 Bitcoins, that's $5 million. That's a big deal, right?
Meanwhile, devoted Bitcoin hodlers have been greatly rewarded in the following years as prices saw 3, 4, and even 5-figure sums. These early investors understood the value of Bitcoin's design and the fact that there could only ever be 21 million Bitcoin.
Where does supply of Bitcoin come from? And how are you sure the market doesn't get oversupplied?
The supply of Bitcoin is determined algorithmically based on a geometrically declining supply function, meaning that in the beginning, every 10 minutes, 50 new Bitcoin are created. So every block, the heartbeat, 10 minutes, created 50 new Bitcoin. This Bitcoin is used as a reward in a game theory-based security model that ensures that every transaction is independently validated by completely anonymous actors who have to stake electricity as a guarantee of the security work they've done. And if they succeed in doing the security work of validating transactions correctly, they earn as a reward, based on a probabilistic return, that reward. 50 Bitcoin every 10 minutes. That's how currency is introduced into the economy. Every 4 years, it gets cut in half. As a system, it's designed to have a monetary policy that is purposefully deflationary and simulates the issuance of precious metals. It gets harder and harder and harder to mine gold at greater and greater and greater cost. And Bitcoin is the same. The idea being that less and less is issued over time. If you follow that geometric curve, at some point you reach the end. In the year 2141, Bitcoin is no longer issued. 21 million coins is the asymptotic cap. That is part of the protocol. It is an unchangeable part of the protocol, and it is a rule enforced by every system that participates in the Bitcoin network.
On the other hand, the supply of dollars in the world is in the tens of trillions, and the number is ever expanding. Bitcoin's supply is set in stone. Its emission rate is predetermined. Its accounting is transparent and publicly verifiable. It's outside the control of any government or central authority. Bitcoin is unlike anything the world has ever seen. It is the Internet of Money that has appreciated over 84,000% against the US dollar over the past 7 years.
And so that's another reallocation of trillions of dollars. Bitcoin and things like it is the equivalent of the red pill. We are entering a completely world of uncharted water right now.
Have you made any investments in Bitcoin?
So I mean, I own Bitcoin in my hedge fund, I own Bitcoin in my fund, I own Bitcoin in my private account. It is a huge deal. It's a huge, huge, huge deal. Because what you're talking about right now is for the next 3 to 5 years, an unbelievably better store value. It is gold 2.0. The value of gold that hedges the world economy about $9 trillion, $1,300 an ounce, of which only $100 to $150 is the actual production value. So all the rest of it is imputed, where Lena, you and I have decided that it's worth $1,300 an ounce. Well, guess what? I can do the same thing with Bitcoin, except now I can do it outside the purview of every single government. It's being used everywhere where you would think it would be used. Russia, Iran, Iraq, Egypt, Venezuela, Argentina, everywhere where you have currency pressure, everywhere where you want to basically shield your assets. And then after that, it'll probably become a payment mechanism. So in all of these three industries, you're talking about trillions of dollars up for grabs. Up for grabs.
Right now, world governments are all trying to figure out what's going on with cryptocurrencies. If you think about it, it challenges a lot of the government's power. Throughout history, currency has always been in control by governments and used as a method of control. Bitcoin represents a way of removing power from governments, and no smart government would let go one of their control methods without a fight. And that's what we're seeing right now. Some of the most powerful people in the world are slowly starting to attack Bitcoin and other digital assets.
One of the main functions of government is to create currency. Bitcoin is successful only because of its potential for circumvention, lack of oversight. So it seems to me it ought to be outlawed. We ought to just go back to what we always have had, and this is just a bubble.
About 5 years ago, we asked Charlie Munger, we were sitting right there, what he thought of Bitcoin, and he said, rat poison. Back then it was about $100+ per Bitcoin. Today it's 9,000. Is it still rat poison?
Well, it's probably rat poison squared.
We should be prohibiting cryptocurrencies. They disempower the federal government.
But it's already too late. The genie is out of the bottle. They are quickly realizing that this is a global phenomenon that is immune to traditional attempts of currency manipulation. Yet, we can already see some government entities give way to this new innovative technology.
Washington must go beyond the hype and ensure that it's not the place where innovation goes to die. The world that Satoshi Nakamoto, author of the Bitcoin white paper, envisioned, and others are building, is an unstoppable force. We should not attempt to deter this innovation, and governments cannot stop this innovation. And those that have tried have already failed.
There is a lot of talk. I'm all for cryptocurrencies and blockchain technology because I like competing currencies. But it bothers me when you hear about a government saying you're not allowed to do this and not allowed to do that, because historically governments always have to have a monopoly control over money and credit instead of allowing the market to operate. So it's this desire to regulate that the governments are afraid they're going to lose some tax revenues if they're not careful. But governments aren't very tolerant of competition.
So I'd like to go back for just a moment to the cryptocurrency issue. To return to the question that Senator Perdue had asked you about the impact of a cryptocurrency system on our reserve currency. If a cryptocurrency system were to become prevalent throughout the globe, would that diminish or remove the need for a reserve currency in the traditional sense?
I think things like that are possible, but we really haven't seen them. We haven't seen widespread adoption. I mean, Bitcoin is a good example. Really, almost no one uses Bitcoin for payments. They use it more as an alternative to gold, really. It's a store of value. It's a speculative store of value. like gold.
The chairman of the Federal Reserve just compared Bitcoin to gold in front of Congress. This response is intelligent, informed, and balanced. Slowly but surely, Bitcoin is becoming mainstream. It's pretty incredible to watch. Gold is a $7 trillion asset with over 5,000 years of history, and Bitcoin is a 200 billion asset with 10 years of history. But when it comes to their abilities to serve as stores of value, the overseer of the global reserve currency believes they are equals. And if this wasn't bullish enough for Bitcoin's future prospects, President Trump decided to give his take on Bitcoin and cryptocurrencies. What started out as a critical tweet on Bitcoin quickly turned into something so much more, something much bigger.
And Donald Trump is giving his 2 cents, particularly on Bitcoin, the president tweeting in part saying, quote, "I am not a fan of Bitcoin and other cryptocurrencies which are not money and whose value is highly volatile and based on thin air. Unregulated crypto assets can facilitate unlawful behavior, including drug trade and other illegal activity."
A tweet from the President of the United States will be viewed and talked about by millions of people and could ultimately become the global red pill moment that actually exposes the underlying flaws of the current monetary system while highlighting the benefits of Bitcoin.
What is the resistance that Bitcoin is facing from standard financial institutions that are in control right now?
The progression of what happens when a giant, well-established financial institution that's been around for 50 years or 100 years is faced with a disruptor that they cannot tamp down, that they cannot shut down, sue, buy, co-opt, eradicate, ban, legislate against. And what happens then is what I call the 5 stages of grief. First, we start with denial. And we saw this play out exactly like this with the banking industry. The first reaction was denial. Bitcoin can't possibly work. It's not real money. It doesn't really exist. It has no value. It will never survive. Fast forward 5 years, you keep making that argument, it becomes less and less credible because it's not real money, yet the big metal bird that brought me to Los Angeles today was paid with not money. So you can claim it's not money all day long, and I've been living on it for 3 years, which kind of undermines the argument. If I earn it and I spend it and people give me rides in big metal birds, it's money.
Trump's poorly thought out critiques seem to have backfired in a major way. In fact, Trump's attack on crypto could have the opposite effect and become the unexpected catalyst that ends up pushing Bitcoin's price to new heights.
Yeah, I think on balance it's a positive because, cryptocurrencies and Bitcoin really are in the main stage now. Congress, the Fed, the president weighing in. It's very surprising. A year ago, I wouldn't have imagined it. But more importantly, it's going to force everybody who's not involved, and remember, a very small percentage of the world actually cares about crypto and Bitcoin. It's going to force the other 98% of the world to think about what it means, and so it's going to be, I think, an overall positive.
Now it seems the other focus is on criminals using crypto for illegal things. This is a scaremongering tactic. The reality is that US dollars are used for crimes much more often than Bitcoin. Just don't expect your government to tell you that.
Denial only works for a while. Then they go into anger. It's the money of terrorists, criminals, and the unsavory elements of this world. And they've tried to do this again and again and again. They did it with the internet, right? The internet, when it first came out, you heard this media narrative, it sells papers. It didn't sell clicks at the time because they were doing it about the internet, but it sells papers, which is the idea that the internet is a haven of crooks and fraudsters and terrorists. Yes, criminals use advanced technology. Criminals use the most advanced technology they can get their hands on because they're in a very highly competitive, high margin, high risk business. Criminals wear shoes to run away from bank heists. Criminals drive cars to get away from bank robberies. They use cell phones to coordinate with each other. They drink water so as not to die of dehydration. We're not going to ban all of those things, right? Every time they try that, you just turn around and say, oh, well, actually, the biggest money launderers of drugs in the world are HSBC, the Hong Kong Shanghai Banking Consortium. Inconvenient fact.
Is that really the biggest money launderers in the world?
Yes, they were caught money laundering $700 billion for the Sinaloa cartel over a period of 10 years.
There's no doubt the dollar is the most dominant currency in the world today, but to say that it is stronger than ever would be misleading, especially since it has lost more than 96% of its purchasing power since 1913. In other words, the world's reserve currency experienced an average annual inflation rate of 3.14% over the last 100 years. The US dollar's inflation is a feature. The only predictable thing about the US dollar is that its purchasing power will continue to drop. The Bitcoin blockchain was created in part to address this historical weakness.
Well, it's so confusing for anyone as it is when you get into the issue of what is money and where's money coming from, and how does the Federal Reserve, how does the government, how does anybody create more money? How do you print more money? And if you are printing more money, where's it coming from and what is it? It used to be gold. It used to be the gold standard. It used to be if you had $1, it was $1 worth of gold. It was a note that was worth $1 worth of gold.
Yes.
That made sense.
And that stopped, it first stopped in 1936, I believe, Bretton Woods Agreement, and then it stopped completely in 1971 when Nixon closed the gold window. He basically said, if anyone comes to your bank and gives you $1 silver dollar or $1 gold dollar and says, I want my silver, you say no, and basically defaulted on the backing of US dollars by gold.
Since the dollar is inherently designed to lose value over time, keeping your hard-earned money in fiat currency absolutely guarantees that at least 3% of your wealth will evaporate every year. It's no wonder that Bitcoin is gaining a foothold in countries with capital controls like Venezuela, where paper money is now virtually worthless.
Today, you need this amount of money to buy this cup of coffee. The inflation has been so out of control in Venezuela in recent years.
When you look at Bitcoin price predictions and hear prices like $100,000, $1 million, or even $10 million per Bitcoin, you might be left shaking your head. That is unless you understand the consequences of printing infinite amounts of money, or in other words, a term known as quantitative easing.
The easy money, not just here in the United States, but we did see the Fed cutting rates, is the rocket fuel that will fuel the rise of Bitcoin.
Yep.
Explain what you mean.
So look, whenever we get to recessive periods or kind of slowing growth, central banks have two tools, right? They can cut interest rates and they can print money, quantitative easing. And so when they do both of those things, it usually takes anywhere between 6 to 18 months to actually feel the effect of those tools. And what it's going to do is it's going to coincide with the Bitcoin having cutting rates, printing more money, systematic structure of Bitcoin is going to lead to higher prices for Bitcoin over a long period of time.
Okay, so there's plenty of money already sloshing around in the global economy, but to your point, as central banks, including the Federal Reserve, ease, there's going to be more and more money in the system. So on the one hand, you've got cash in the system, the ordinary, the fiat currency system, increasing at the same time as you've got effective supply of Bitcoin reducing. You're arguing here that that will mean the price rises.
Look at gold, right? So since we got off the gold standard in the United States, gold's gone up about 40x, right? So there's the argument that gold actually appreciated in value. The other argument is that actually the dollar has depreciated against gold, right? So there's a debasing of the currency that happens. And so as we cut interest rates and print more money, we're debasing our currency.
Your price target is $100,000 over 2.5 years. That's a long way up.
Yeah, well, look, in 2017, Bitcoin went up 20x, right? So it's a hyper volatile asset. We've seen it go up 20, 30, 50x at times. We've also seen it draw down over 80% now 3 times. And so we think now from about $10,000 where it sits today, it's a pretty conservative estimate to see it hit $100,000 in the next 2.5 years.
Today, interest rates are at historic lows. The Federal Reserve and other central banks have shown that they will continue to not only print more money to prop up the financial system, but are also open to negative interest rates as well. Therefore, the question is when, not if, all this newly created money will trigger hyperinflation. So how can anyone hope to preserve value with this kind of inflation in place? Bitcoin offers an exit strategy from the continually expanding fiat money supply.
What's really astonishing is that I'm talking about the greatest experiment in money. Started in 2008, 2009, and this great experiment is completely unprecedented in the history of money. And I'm not talking about Bitcoin. I'm talking about 22 central banks simultaneously taking their interest rate to zero and pumping the largest amount of money ever created into the world economy, trying to stop it from collapsing. And that has created the largest bubble in history. And the weird thing is that most people are not even aware. And then we have the other little monetary experiment, which is, hey, money on the internet with a controlled issuance. Only a certain amount of the money is created. It's controlled by a mathematical formula. You can't make more. And as a result, it's got a stable supply. It's sound money. And it cannot be manipulated by governments or banks.
Almost 85% of all Bitcoin have already been created. After the final Bitcoin is mined, the system will produce no more. The trend is obvious, and at this point, it appears to be inevitable. If Bitcoin is able to sustain use over a long enough period of time, it will have a chance to become the most notable deflationary currency unit since gold. You see, unlike traditional money, Bitcoin is not susceptible to warrantless hidden inflation and is not controlled by a central authority. So when the economy collapses due to a mishap on the part of central bankers, Bitcoin will see a massive capital inflow. We can see that the constant stream of newly printed money will eventually lead to Bitcoin hitting a market cap of 100 trillion as the dollar prints up its price. Bitcoin is a black hole for fiat. This is a self-fulfilling prophecy, a catalyst that will eventually make Bitcoin the true global reserve currency. If you made it to the end of this video, let me know in the comments if you're bullish or bearish on Bitcoin in 2019. Also, make sure you subscribe and like this video. Thanks for watching, and I'll talk to you later.